now move to Mr. Erskine-Smith for 5 minutes.
Thanks, Joel. I want to start with bracketing blockchain from crypto for the moment, because Brian, your comments around the value of smart contracts, the value, the economic activity that can be facilitated by blockchain, I think is unquestionably true. We studied Estonia's KSI blockchain and digital ID in the last parliament, and there's a huge economic value and savings in that regard. And Aidan, you've mentioned the value of blockchain in relation to tracking international aid. There's obviously unquestionably value of blockchain in tracking food supply chains and supply chains more broadly, right? But I guess the question around crypto, currencies in particular, is what value they are providing over and above, what value are they providing to society that, as against the volatility risk that we've seen with Terra, that we've, and even if you want to bracket off FTX from this to say that's pure and outright fraud, although they were making claims around, FDIC protection that they didn't actually have a number of months ago, and so there's still concerns as between, in the protection on a consumer basis. But all that's to say, let's bracket these conversations apart, focus specifically on cryptocurrencies. What's the value that they are providing that isn't provided elsewhere, as against the risk that is being created for consumers?
I would start by saying that you have to ask the question of what is the definition of a blockchain? And this is perhaps a little a hotly debated topic. My view is that a blockchain is a trust coordination mechanism, meaning if you have two counterparties that do trust one another, you probably don't need a blockchain. You could use a database, MySQL, MongoDB. These are all excellent tools. You didn't really need a blockchain. A blockchain comes into play. Again, this is my view, and some people may disagree with this. You need a blockchain when you have counterparties that don't trust one another. And the question is, what is the commodity or the asset being put at risk to being a good actor? And so in Bitcoin, you have electricity and computing hardware being put at risk, and the token that is rewarding them for their activity of being honest and secure good actors is Bitcoin. It's a token that's native to that system. In Ethereum, now there's been a transition away from computing hardware and electricity, and people are moving that commodity from being external to the network to one that's internal, which is Ether, the native token of Ethereum. And so the reason why people want to buy those tokens is that they believe that these open blockchains, these databases that you don't have to have counterparty risk, you don't have to trust anyone else, are going to be very valuable tools. And so they are purchasing those.
Pause. Because so take a token like Helium, right, which I understand to be contributing to, there's an incentive to add value to providing some of your network, contributing your network, and then there's value to having the token to then use the network, and then they are able to create a public good, a clearly real world public good. But if you're saying we're just creating these tokens in the hope that they get trusted down the road and there's going to be value, like in what world does that make sense?
Well, I can't speak to Helium, and I would ask someone else to jump in if they know that system. But again, if you look at why Ethereum was created different than Bitcoin, is it's trying to build a settlement layer for any asset or any activity. And those assets can be real-world tokenized dollars, real-world tokenized real estate, or crypto-native activity like on-chain trading, which are self-referential to its own ecosystem, or it's NFTs in the metaverse. The question is what underpins that system, and there you need a token. Does someone want to jump in on Helium?
Yeah, if I could just speak to one of the points Mr. Mosaf made earlier. I might not be 15 years old, but I missed the previous internet boom and, was born into this world that really owned me, right? Everything on the internet owns everything I put onto the internet. So people like myself trying to recreate kind of these systems in decentralized ways, right? Taking away the power of the centralized actors is why these cryptocurrencies are necessary. It is
understand, but pause there, Aidan, because then with that decentralization, comes no central protection, and what you end up with a case like Terra is people losing their shirts. And so how do we have that decentralized model, that vision that you've got, while making sure that people don't lose their shirts?
Absolutely. And you know, unfortunately, the reality is a lot of people in blockchain knew that Terra wasn't a legitimate alternative to something like MakerDAO, for instance, which is another decentralized stablecoin.
Because Evan, I could, you know, if people knew, I could go on Wealthsimple or Adam, I could go on your crypto platforms, and I could have bought Terra, presumably. And yet Aidan's telling me that people knew that it wasn't legitimate. So I mean
it was. I didn't say it wasn't legit. It wasn't as
come on, though.
backed as something else. So that's why
if I could just chime in here
and educate people and work together like we're doing today, and have more of these committees, because the issue is that we weren't talking. The issue is we weren't making our voices heard. And so what we need now is to honestly work together to create the regulation that empowers people to participate in this new internet without taking their opportunity from, you know, participating, right? And so we need to work together in ways that we never have before to ensure that things like Terra are caught ahead of time, that things like FTX are caught ahead of time.
I agree. I'm out of time, so I would just say I think that's right insofar as we need to focus on regulation and protection. And if there's a way of matching that regulation protection with the vision of decentralization that you have is great. But the core thing is this, is how do we make sure we, as people who want to, as regulators, as legislators who want to protect the Canadian public, how do we make sure we are differentiating between tokens that are adding value to society and pump and dump schemes? Because at the end of the day, there are too many of those around, and people are going to lose their shirts.
At last, we'll now turn to Mr. Erskine-Smith for 5 minutes.
Thanks very much. I just want to return to, in my last intervention, there was some conversation about this acknowledgement in the industry that some tokens and some companies are less legitimate than others. And Mr. Gerritsen, on the platforms, the crypto trading platforms that your company operates, is there any acknowledgement for consumers, any discernment for consumers and retail investors as to what would be credible and what wouldn't be credible in terms of the difference as between what apparently is common knowledge in the sector of what's legitimate and what's not?
Sure, I can help, excuse me, shed some light onto that. So just to give a bit of a scale perspective, if I had to guess off the back of the envelope, there may be 1 million different types of cryptocurrencies, assets that are created. Our platform at any given time will trade about 30 or 36 of them. One of the requirements we are subject to as a crypto trading platform is product due diligence. So we have to review the risk profile of the asset from a technology, operations, legal and regulatory perspective prior to making it available for trading on our platform. It's not perfect, obviously, but it is better protection than you can get in a lot of other places around the world by having market intermediaries that are held to those standards from securities regulators. Part of that is also disclosure.
When you say around the world, though, you're not comparing yourself to the Canadian framework.
I believe the Canadian framework is one of the strongest in the spaces globally at the moment.
So was Terra? I could before it went bust, I could purchase Terra on your platform.
Correct.
Luna? And so what's the due diligence there?
So the due diligence is on all of those factors. Like I said, it's not perfect, right? That is certainly one case in an instance, and that was a black mark on the industry at large for certain.
Okay, so pause for a second, because of the dozens of products that I'd be able to trade on your platforms, how many are adding a discernible value, a real world value today, versus how many of these tokens and coins are speculative investments, that people are trading them with the hope that others will perceive it to be more valuable and that it will trade up down the road and they'll profit as a result of that speculation?
Thank you. I think there's a number of questions built in there, but the way I'd like to address it is from a marketplace perspective. And you'll hear a similar sentiment coming from regulators as well, is that we're not in the business of picking winners and losers. What we are seeing is that Canadians are interested in potentially picking winners and losers, investing in speculative assets. So what we are doing is,
despite the fact that there's no, so look, like there are penny stocks in this country,
mm-hmm.
but there's an underlying business case to those penny stocks. There's no, and they may be worthless in the end, right? But it's not to say we're not listing a venture that has no underlying, that is just to say this might be worth more. It's as what did SPF say? It's a box, and the more people put money in the box, more other people see it as valuable, so the box has more value. I mean, that is something we ought to prevent from a retail investment perspective, no?
So I think one of the ways to look at that question is that disclosure is certainly very important when a new asset is created. What's being said in the white paper that creates it, what are being said by the founders. Platforms like ours do have to provide disclosure statements and risk acknowledgement forms to the individuals who are going to be trading in those. So really education and disclosure are key to address that perspective. And again, we're an evolving industry looking to get it right and as right as we can. And like I said, we're in a stage of evolution, but where we are focused on is disclosure and education for investors in making investments.
So if we're educating investors, how useful do you think this education is? Your principal investor, the namesake of your firm, so-called Mr. Wonderful, and after the fraud of SPF, he's out there publicly saying that he was one of the most brilliant traders in the crypto universe. He also built one of the most robust platforms. We used FTX actively, and then would you invest in him again? And he said yes. I mean, what education are we really bringing to bear with comments like that?
That's a very strong point. Mr. O'Leary's comments in that regard were his own with respect to his own investments, so I can't speak directly to that. But what I can say from a platform perspective is that I'm very happy that our regulators require us to put out disclosure statements that are prescribed, and we do everything we can to make sure that we're adhering to those guidelines on a real-time basis.
Thanks very much. Well, it would be helpful for both Mr. Garrison and Mr. Thomas. I mean, I would very much like to know, in your view, in your company's views, how you think we can better protect retail investors in this space. And so if you can follow up in writing at some point with some suggestions for what we might consider, I'd appreciate it. Thank you.